Welcome back, you lovely people. Now today is a very interesting video because we are going to go through today how to establish very high probable areas of interest, points of interest, whatever you want to call it. Whether you're a beginner or whether you're many years in and you're struggling, this video should hopefully be a huge breath of fresh air because it's exactly how I do it to this day. And I'm over 11 years in. And just a little bit about me, if you're new here, I'm over 11 years in. I've just said I take every trade I take, I post live for full transparency at the time of taking it, fully timestamped, fully transparent, have done and will always continue to do so. So it's as transparent as I can be and to prove what realistic, professional retail trading performance looks like. So without further ado, let's get stuck into the video. Right guys, so as I was saying, basically, I've picked gold because I know lots of you love trading gold, even when you know you probably shouldn't be at the stage of your journey, wherever that may be. But we will go through gold because I know it is a fan favorite. So we're going to go back to a random piece of data. So there's nothing planned, and we'll take it from there. So it's a fresh set of data, a complete clean canvas, and so you can see how we go from an empty canvas all the way through to establishing a very high confluence and highly probable area of interest. So if we go into the month, and let's just go on to a random bit of data, go on to replay trading, and if we just click a random bar, brilliant, it's taken us back to basically 2019 and at the start of May. Cool, so what we're going to do is, for me, I always start on the monthly. Some people might not do this, but again, I'm 11 years in. This works, trust me. So if you don't normally do this, please listen in, okay? Because you might learn something incredibly important today. So at the point in time, I don't give the monthly a huge amount of weighting, but I just like to know what's going on because obviously every one candle on the monthly chart is 31 days worth of price action. So if we do see a flip and change of structure on the higher time frames, it's very laggy on the monthly because we've got to wait till the end of the month to confirm on that monthly candle closure. So at the moment, we've just got to imagine we're just in a bearish leg here. Okay, we're currently within a pullback, but if we just measure that range, we are at the moment still holding under that 786. For me, when that's broken, it's a 1 out of 2 trend change factors. So for me at the moment, the monthly is technically still bearish, but by the looks of it, it looks like we may be now starting to turn bullish. But I don't put too much importance, too much weighting on that, okay? Now, the weekly, as you can see, we're bullish and we're bullish and we're bullish, no problems, okay? We've got a nice higher low here. Now we failed to come in to make a new higher high. We failed to break above this point here. And then what subsequently happened with this actual candle here, if we just quickly check that, have we broken below these prior bodies? Yes, we have, just subtly, okay? I'll zoom in slightly so you guys can see that, okay? So upon breaking that and breaking this higher low of this bullish leg, we've now turned bearish and we've gone in to put our first lower low down here and then we're potentially forming a lower high as we speak. So the weekly is bearish, okay? Now this is important because you'll see why. Now the daily is bullish, okay? Bearish at this point here, you know, broken structures to the downside, lower high to a subtle lower low. It's a poor lower low, as in it's not a significant new lower low. It's just subtly taken out that prior lower low. And then at this point here, where this is our lower high, so this is our most recent point of structure we're interested in, you can see on this daily candle here, we broke and turned bullish, okay? So the daily at the moment on gold is technically bullish. So again, if we measure this range, we are still within a bullish leg, okay, because we're still above the 786, okay? Now, so the daily is bullish at the moment. The weekly is bearish, okay? And if we go on to the 4 hour, I imagine the 4 hour is bearish right now to allow for this daily pullback you're witnessing. Yes, 4 hours bearish. So we have a situation here where the 4 hour is bearish, the daily is bullish, the weekly is bearish, okay? Now we want, before you entertain and get an area of interest or a high confidence area of interest, you absolutely, or for my strategy that pays me over and over again, okay? For my strategy, you've got to have that all in sync. Otherwise, you are kind of not trading against, sorry, you're kind of trading against the trend. Okay, so the weekly, the daily, and the 4 hour. If the monthly's in sync, brilliant. But as I said earlier, that monthly data could be very laggy in terms of waiting for that end of month candle close. So at the moment, again, 4 hours bearish, which is good because it's in sync with the weekly. But we need the daily to flip for us to entertain this in a bearish situation. So what do we need to happen first before we can establish an area of interest? We need to make sure we see both trend change confirmations happen. So number one is a break of the 786 with a body close, not a candle. It's the body closure we're interested in, and that's trustworthy. And then also a body close of that most recent swing point as well. So we will just let this play through because there is still nothing. Okay, so at this point here, we still haven't broken the 786. This is still body closing above and wicking above. It's not a break of trend yet. Okay, right, we have now potentially had it. Good, so we've had a break of trend here now. Okay, now you might be seeing this and think, well, actually, no, that's flipping bullish. For me at this point now, we've had one of two trend confirmation breaks. Okay, one of two. I ideally need this to happen as well for extra certainty. Okay, obviously there's never 100% certainty in the markets, but for extra certainty. Okay, cool. So we're going to still sit on our hands at this point, even though the daily's nearly in sync with the weekly and the 4 hour. Okay. So now what's happened? This is why you always wait for this is why you always wait for both trend confirmation changes, because of something like this. Okay, so one break of those two things makes us cautious and sat on our hands still, because you can see exactly why. We need to wait for the second confirmation, or things like this can happen where we flip again. So we have now officially turned bullish, okay, or confirmed bullish again. Okay, so what we can do now, we can delete that fib. We just need to check from a 4 hour perspective that's flipped. Of course it has. So we now have, guess what? The 4 hour bullish, daily bullish, and the weekly, we can see this was the lower high as we talked about. So we come into the lower low to the lower high. We've broken out of this. So we are now officially bullish. So this is now optimal, and we can now look for an area of interest, what the whole point of this video is for. So we're now bullish, so everything's in sync. Do we want to be buying at the top of this leg right now? Absolutely fuck no. No, because we're not going to get the risk reward. It's suicide. It's silly. It's stupid. We want to make sure in a bullish market we're buying off higher lows. Don't complicate it, okay? So we need to wait for this 4 hour leg to finish first, okay? And it might keep pumping and pumping. It's pumping and pumping. Look at that. There's absolutely nothing here still. There's nothing here still, okay? Because we're waiting to buy off higher lows, okay? This, for me, is really shitty price action still. And again, if you look on the daily, we are massively overextended. So we need to see a daily pullback first, okay? We need to see it. Okay, we may be starting to get one, potentially. No, we're not. And off we go. Okay, so this example at the moment, although it looks like the 4 hour swinging nicely, if we look where that 4 hour is within the daily, we're right up here on the top of a leg. We've not had a significant pullback. And things like on gold will do this many times, okay? And when it goes, it can just go. And unfortunately, if you want to be a conservative, good trader and have longevity in these markets, you've got to be patient, okay? So we are now in a position now where we can look for, potentially, we've pulled in here. Now, we know we're now not coming down here. We've well and truly taken off above and beyond from there. But what we can look at and is measure this then range here. We did subtly break out here, so I can measure it from here. Okay, now we want to see, has that come off 50% of the range? Yes, it has pretty much, okay? It's broken the 382, which is an aggressive entry in here, which is I'm not a fan of. 618 obviously is below that. So we have come off this range here, sort of 1386, nice round psych number, okay? And this is the daily, remember. We've had now a couple of attempts, and now we're getting the push off, okay? So here's a little premature, but once you've seen the market agree with us that we're still going high, we can now look for an area of interest, okay? So this is the 4 hour, we're broken out again, 1 hour, broken out again. Again, we're at the top of legs still. So again, we need to wait for the market to be patient and wait to give us our pullback, okay? So we are starting now to see a range. Perfect. This is the type of price action. This can be applied to any pair, okay? Now, in terms of areas of interest, Gold loves wicking and pocketing and trading into the 50% and the 61.8 region. Now we've got about 1,400 area of interest in there as well. We've got the 4-hour EMA, we've got prior 4-hour structure to the left, okay? The daily as well, we're currently having a pullback even though we've left that area of interest, okay? And if we go on to the 1 hour, we are now starting to build a potential bit of a base. Now, so from a highly confidence area of interest, remember, everything is in sync, so weekly, daily, 4 hours. So as you can see in this video already, we haven't got a setup or a trade until we have that, okay? We can't look for an area of interest until we have that. So at the moment here, this is my most favorable area of interest, okay? This is where most things are going on, okay? But it is premature to just buy with where we're at right now. First of all, this is where you can drop down to the 1 hour, okay? We now need to start seeing rejection, so wicking, slowing of momentum. We need to start seeing that the market is actually stalling here and respecting this area of interest and forming its next higher low before we look at being interested in pulling the trigger, okay? So as you can see, we're now into that 50% to 61.8 pocket region, okay? We're starting to see some potential candles, but not right now. There's still not enough. We need to see the market push away again in a bullish sense, okay, for us to be interested. So it's still not happening. Okay, potentially getting it now. Cool. So if we jump onto the 4 hour, well, actually, before we do that, let me just delete this. So from a 1 hour perspective now, I like that because what we've done, we've come into that 61.8. We have tapped into basically 1,400 exactly. So now I like this upon this reaction that we're getting. We know everything's in sync, so we're just waiting to see a 1 hour push away, and we've now broken out of this sort of trending bearish, sort of small 1 hour bearish price action. So you can then simply look here, okay? We can initially look to run it into those initial targets of that leg, okay? And we just need to make sure stops wise, we are covering. We just need to make sure we give these lows here enough room, okay? So something like that just down here would give us our risk to reward basically just about a 1 to 3, give or take, okay, upon that entry. Now you could drop down to the 30-minute potentially as well. Oh, it's not going to give me the data, annoyingly, fine. So if we look at that from a 1 hour position, we know we're in sync, okay? Down here is not enough, okay? Because we haven't seen the push off. This is the push off, hence why we can then look for entries. Now we're in a position here with gold where we can look at, depending if this plays out or not, we're not going to know until we press play in a minute. We can look at running this into higher end targets as well. So we'll see, okay? So off we go. So again, you can see we were floating around a bit of drawdown, which is really important. We've had another retest of that 61.8, okay, or that area of interest. Again, a fib is never a reason to take a trade. It just highlights areas of interest where price may pull back and retrace into, whether that's a bullish market, trending market, or bearish, okay? Okay, so we're pushing now, pushing. Still running. Let's pull that across. Still running. God, look at that. We are ranging hard. Still not been stopped at this point. Nearly been stopped, but not quite. We are still floating around this 618. Let's go on to the 4 hour. Still holding. And there we go. Just about had that push. Let's get back onto the 1 hour. Okay. And do we get there in the end? Yes, we do. Now, what I was saying a minute ago about extending to targets, which would give us a 4.3, you can see that would have played out as well. So this is the importance of stop loss placement. We nearly came into it, but we didn't. Now, this example, like I said, this was completely random picked. This is for full transparency, because when people say they have a setup, they have an optimal setup or an A plus setup, and it looks a certain way, you can be a little bit too regimented sometimes. What I prefer doing with my model is you have a optimal set of conditions, as you can see in this video. You have an optimal set of criteria, because you will still have different looking trades when you're going long, and the same for going short. The point is, or the simple premise is that if we're bullish, we're looking to buy from higher lows, from higher time frame confluence in sync areas or points of interest, areas of interest. So this is a bit of an ugly trade in a way. It's not the most aesthetic and the most pleasing of trades. You know, it's been floating. And you know, that would have been an entry around Friday morning. and we didn't hit take profit till so what date was that? That was the Friday the 12th, and we didn't hit initial take profit that we were going for, we didn't hit until Thursday the 18th. So we nearly held that for a week, okay? But I say to people, that's 3%. There's nothing you've had to do there. You can let that play out in the background, go and live your life as normal, and that's 3%. And for someone like me, without boasting, without sounding like an arsehole, this is just to show you what's possible and inspire you. When you are trading high six figures of capital, personal capital like myself, 3% goes a huge way. It's life-changing money for 99% of you watching this. So less is more. Patient, less is more as in fewer positions, but high quality, higher time frame driven positions. This is an ugly looking trade, I'll be honest, but it was still optimal. And this is why I say to people, you need optimal set of conditions. And that's where then positive discretion as well can come in. Because sometimes if I was having this conversation with a mentee the other day, who's come to me off the back of having a very, 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 very strict mechanical model. And what they found is they end up missing lots of fantastic trades. As in too many, because the model doesn't allow for it. When I was looking back on their journal, there was they had some brilliant trades they'd found on their own accord, and things like I've just talked about in this video, where everything is in sync. They were beautiful looking trades, but his model previous to meeting us didn't allow him to take it, and he was leaving a huge amount of percentage gain on the table. So a few quick fixes like we've done with my strategy, I know this is only a glimpse of it, but a few quick fixes has made a life-changing difference to him already. He's now trading 200k. He's now making, I think he made 7.5% on 200k. So he's waiting for that payout now from FTMO. 7.5% on 200k is unbelievably brilliant. So guys, I hope that helps. It's a nice big example there, but nice and transparent, randomly picked a bit of data. I'm pleased there wasn't an optimal setup at the start of this video, that we had to wait for price to play out a bit more, wait for timeframes to turn in sync, and take it from there. So guys, as always, thank you for following along. And if you want my free ebook, which covers how I trade gold more in depth, click the link below. It'll be the first thing you see in the comments. It'll be a pinned comment, free gold ebook. And that will sign you up to my newsletter as well, where I will send you every Sunday a little trading digest for the week ahead, things to look at and what I'm looking for the week ahead. So guys, as always, much love and thank you for watching.